Let me get my drink in hand. Let's see what's happening. First, I'm going to take a look at SPY. Was watching it all day. Little fluctuation. Tomorrow, going to be a super tight range. Probably going to be right at where SPY closed. I like post. Went up just a tiny bit, which is okay. It could possibly be, it looks like tomorrow, that tight daily volatility range will be below price action. That will be good. Another good thing is, right? Sellers try to take this and keep it down below the weekly range. Closed up above it. Had some nice support at the bottom of the weekly range. Tomorrow, I wouldn't be a bit surprised to see this thing bounce. Let me see here. Let's take a peek. How'd this 4-hour chart end up? Yeah. You can see this last 4-hour candle, that last bump that got it back up into that range. There's a lot of hidden bull. And now pretty much a bottom's been set on the 4-hour on both returns oscillator and price action. 3 stabs, hidden bull divergence. Got the low length Fisher turning up. There was definitely bull div between price action, right? All lower lows, higher lows on the DLP. And this is, for the guys that just are running the pro chart. That's why we give you this ALR, right? The alpha laser return. So you can practice starting to see divergence between price action and returns. That's what it's all about. I mean, here's a good example right here. Boom, boom. Get a nice move up on the 4-hour. And then once you get a mind full of volatility and understand the expansion, the contraction, the breaks in correlation, whether it be positive to negative, negative to positive, how those ebb and flow within each other. At some point, if you're wanting to make a move, become a professional trader, we got the tool bag for you there too. But that's why we always like to start people low. You'll never hear us shilling our big indicator package. We just don't do that. We don't want people to waste money, right? This is definitely what we do. This is for serious traders. You can just be a regular retail trader and do this, but not everybody's got $100 a month. Just to, throw, and you're just, because the way we trade, low time frame volatility, intraday trading. We're not swing trading. You don't swing trade volatility, right? Won't swing trade volatility. Just not a good idea. That's why we do what we do. We're very profitable doing it. Yeah, I like the 4-hour on SPY. This thing's probably going to pop tomorrow. Especially with that down move. That log return Z-score had a couple outliers into these confidence intervals. That's usually good to get a nice move. Stutter step in here a little bit. I mean, there is a little bit. And here's the thing. This whole move up, right? These higher highs. You're getting lower highs on the returns oscillator. This is how divergence works. So this whole time, it's been an ebb and flow of bear div into hidden bull. And sooner or later, one of those, you're going to get a nice move. And usually it's this move is what you want to see here. You want to see 4-hour candles closing up above about 390 when this returns oscillator starts making a higher high. Because if this return oscillator just goes up to the zero mean right here, and hold on, excuse me. or no, if this passes, creates a higher high and the price action gets left behind, you're going to create hidden bear and you're just going to get a continuation of this move. Sorry, confused myself there. Let's see how the 90-minute looked. Definitely setting up some hidden bear div on the 90. 45 is probably another story, I would imagine. Yeah, some bull div. Yeah, this could pop. That could change on the 90. Entropy is going back into randomness. And the predictors, definitely price action to the top side. Good stuff. And we'll work on this new entropy upgrade. And everybody that does have the Pro Trader account will get that. We'll get that upgrade.
That looks very neat.
Yeah,
That's
I don't
easy
have
to
to use the
understand.
A2. Yeah, I don't have to
Yeah,
use.
man. I really like that.
And the Shannon entropy percentiles built into it as well, where I can turn it on, and it's like it'll be where the where the A2 was. You'll see it'll pop up.
Yeah.
So there's entropy
Oh,
percent.
man.
So I got to do some work on the colors, and it's got all kinds of different like color options, right? That's what's cool about this. That's what Donnie's been doing, adding a lot of variations of these indicators, which is really cool. You start messing with it, yeah, yeah.
It is. It helped me understand. Like I'd see like, oh, Bilbo's. I forget what it was. Like Bilbo's setting for this indicator, and Andy's setting for this indicator, and then I
Right.
go, I like this and I like that, and that helps me see that, and then you eventually build your own one out. But
Yep.
because you're like, what are the other three traders looking at? Because it's all how you interpret this information. But yeah, that's very cool. Thank you, Donnie. Thank you, James.
Yep. And that's the thing with these indicators. That's why it's like it's hard for me to show you how to trade. Everybody trades differently on these low time frames. It's something you have to learn. I mean, I could sit you right next to me, and if I'm trading the 1 minute and the 5 minute chart, you're just going to get lost. There's so much that goes into it. And that's not bragging or anything. That's just time on the workstation. You have to be just as good at reading these indicators as you are operating your exchange, because you are putting orders in fast. You don't have a bot running, right? You're doing all this. And so you got to get into a routine. And that's why I know Durabit's got a nice test net. If you can go to Durabit and start trading, just trade on the test net. Learning how to put in quick trades, right? No stop losses. Stop losses in your head. So if it's like, I will, as soon as I get into that trade, because you never know, right? The first thing I do, I'll probably go to if I'm in a long position, I'll load the exchange up with a market sell. No price yet, right? Obviously, and it's because the thing is, if something changes on the low time frame, I'm going to recognize it, and sometimes I might actually try to limit out of the position I just got into, right? And usually I go with my first instinct and it's pretty good. And if I don't do that, chances are I'll be marketing out of the position, and that's the stop loss. Because you don't want to put it in the system. The exchange can see it, right? They're trading against you 100%. This is not regulated. Never. This is just, these are the same people that are like, oh, my government would never do that to me. Listen to me. These exchanges are not your friend at all. You are liquidity for them. They're going to try to grab it. So the less of your hand that you show these crooks, the better. With profit taking, stop losses, it's all in my head. That's what's great about volatility, because when the volatility really starts to expand, and the entropy is trending, it just makes it so much easier. You're looking at the variance. I mean, just look at SPY, and this is a 45-minute. It doesn't matter though, right? Anytime, this is on any time frames, but just powerful outliers all over the place. boom, boom, boom. I mean, there's 6 good trades, highly profitable trades. There's been a lot of volatility in SPY. Usually crypto definitely takes that cake. Been a lot of volatility in SPY lately. You could go trade gold. How fun do you think that is? Let's see. That's where you need leverage. Gold and Forex. People are over here on these highly volatile markets using leverage. That's once you figure all this out, you're like, oh my God, this is a scam. There is a massive scam going on. Why are people teaching people how to use leverage trading crypto? The volatility's there. That's what leverage is. Where there's no volatility, you use leverage. You can get bigger percentage gains because the moves are tiny. It's like watching grass grow in some markets. Crypto, you can have a move in a 5 or 15-minute candle, a percentage move that Forex does in a month. That is the truth. That's where people should be using leverage, not here. That's why you read about everybody getting wrecked all the time. It's leverage. It doesn't take a very big move against you to liquidate you. That's a problem. There's some massive degens out there. Let me see here. Let me read this chat. Yeah, what was that? 45.
The exchange is trading against the big whales who also have fantastic information, including things like order books. They are sells money market makers or whatever. They also will trade against. They know where to stop loss.
Okay, so SPY closed up inside its weekly. Triple Qs is above the S1. SPY's got a little bit of jump. To be honest, how big was SPY's? Pretty decent too. I mean, to be honest right now, it would not surprise me at all to see traditional markets just range. There's some pretty big weekly ranges. Triple Qs is even bigger than SPY. Would not surprise me at all. You see something. How does this hug? Hug. Yeah, can't even run a projection. The projection's right here. You know what? Give me a sec. Let me go down to the daily. Eight.
Yo, Africa, my mic is pitchy.
Do what?
I hear my mic is so I'm gonna get it new.
Yeah, you're definitely cutting out.
I'll get it.
So I talked about this yesterday about using these projection models where you do not want to start on a doji. You want to start on definitely either a really nice bullish candle or bearish candle. Part for the course. Rejected
Can I
right
please
off
ask?
at 4.
Can I please ask? Why would you suggest that? I'd just like to know. Obviously, I do mine through the flashes, as that just helps me. Like, okay, no, there's certainty here.
Well,
How do I find the pivot? That was my hardest thing.
yeah, it's like, so if I were to start one here, it'd be on this projection would start on this candle right here. And so then you're looking for a sustained move. but you don't want to start on a doji. You really don't. You want to, because here's the thing, even though I'm starting on this candle, you can see it's going off the close. That's how this works. But it gives better reads, and you can really see it. Go down here. Run these on a 15-minute.
Would you say that would be like that it would be the candle that your return oscillator is mean reverting on? Would you say that candle close?
I'm
It's
just
usually
literally, I've always just used pivots on price action. 51. Hold on, I'm half listening to. Hold on for a second. 50.
I could say something on it. So the whole point of it is once a move takes place, right? So let's just say we're 3 standard deviations away on whatever model, doesn't matter, Laplace standard deviation, whatever. You know, if that move is over, you're and you see price pivot, you want to project from that point because you're going to go possibly, mean reverting the other direction. You want to see, okay, are we going back to the mean? Are we going back to, a second or third standard deviation? Whatever, it's like you're at the end of that move, so you want to project where the future is going to be, possibly. So that's the point of it.
There we go. This is what I kind of wanted to do, is throw it on a 15-minute. And it's hard to run projections on. This is why, I mean, I'm throwing those projections on like that daily stuff. We're down here. We're on the 15-minute and the 5-minute with SPY. This is where I like to start projections. Kind of hung here right around the 95.4, tried to dump out to the 99.7, kind of just swimming. You can see, though, I mean, you got a really nice rejection right off the bottom of the 95.4. But if I'm running this projection right here, it's just, I'm in the scalp, right? It's even better to go down here on the 5-minute. When you're getting these little...
Can I maybe ask this question? When you throw up a projection cone, what is and this sounds random, what is the general look back that you find that you are happy to trade? So like maybe if I can throw mine up when they all flash, then it'll flash at bar 1. And then from there, carry on extending out, right? When you throw up a projection cone, do you find that the pivot that you're throwing it up on is maybe 30 bars back, 81, 100? Because, obviously it's going to change with the different time frames, but depending on the time frames you trade. I think that could maybe help me understand like where you guys are wanting to start trading within the distribution, if this makes sense,
Well, I mean, it's going to depend. Depends on where you're going with the projection. I mean, I didn't quite understand exactly what you were saying.
So when you trade, what do you usually find yourself trading that projection cone at? Like, is it less than 20 look back? Is it more than 20 look back? You know what I mean?
Oh, you're talking about
Just,
I'm always
no.
size is always on 30.
Shit, yeah, because we have sample size and look back. I don't know how to put it. Let's say you did 100 trades, okay, and you got 70 right, and you did all of the 100 trades with a projection cone. You then, each trade you did, you generated a new projection cone, and you figured out that, okay, majority of the cones that were in the right direction look like when they were placed on pivots that were 20 plus bars away from current price action. Doesn't matter your sample size. If it was just 20 candles away or 30 candles away, those were the ones that were right. I don't know if I can get this across?
I don't know. You might might be a little over analyzing it a little bit. I'm looking at all these moves right here. I don't even have to like move the cone, and I can just tell every one of these moves is probably banging the 95.4. Boink, 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 boink. That's when you take it to even a lower time frame, like a minute. But this is where it comes in. Yep, that's exactly what it was.
Yeah, it's generating maybe one throw up within your sample.
Yeah. Let me see. Let's move this back. Yeah, look out below. It doesn't take much. And I guarantee you, if we were to go to a 1 minute, let's see, let's get the whole day in. Yeah, right about here. I mean, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. About 13 outliers on the 1 minute today. See something on 5. Yeah, but that's going to be, look at the price action. It's kind of a slow day. I'm probably this far into it, and I'm going. I'm going to go. I'm going to tee it up. Taking the day off. I want some volatility. Okay. Would that end up on the 5? I'll tell you what. There's going to be a big pre-market move. Just watch. Volatility dropped off a cliff right at the last minute. There's going to be a big push of volatility in the morning. Just quick. Boop. Pre-market little pop. Yeah, 5 minute. Just 4-hour volatility. The 4 hours toast too. Starting
I
to
reckon
positively correlated. Just starting to expand.
I reckon pre-market will be touching 379.71, and then figure out from there, which is just below our VRE at $1.30.
It's sitting right on the daily. The new daily is going to be right in the tight, real tight daily range. Probably right on the bottom of the weekly. That being said, this will probably open up around 383 pre-market. Or when our market opens, it'll probably be about 383, 384, right in this range. I bet it opens up above the center weekly. If that's the case, tight range, this thing's probably going to run. I want to see the new 1SD, 2SD. Let's see if we're right here. It's actually going to be, the 1SD will probably be right around the same area. That's what I would be looking for immediately. You know what? Let's see something. Let's see how this correlation's looking. I know they're going to be highly correlated. Where are you? Make sure. Let's see. SPY. No. Yeah, 4 hour. Highly correlated. Going into that close. starting to slow back up. Yeah, these markets are significantly correlated on all the macro time frames. I mean, they're going to move together. Weekly's just building. Weekly is building. Yeah. It would not shock me to have a nice little move tonight with Bitcoin. And SPY follow it up in the morning. Let's see.
Could I please ask? I remember maybe like 2 months ago or a month ago, the alpha coders were maybe working on a panel where we could input like 8 assets and they would tell you how correlated they are amongst each other, just with the lines. Is that still in the works?
What? I do not know. I
Okay.
do not know.
You have that indicator. You have
We do? Okay.
the NMI one. What you mean, the NMI? Yeah.
NMI, thank you.
Still lost. It's okay though. It's okay though. Here, let's see. Let me pull another chart up. We got the pro traders in the house. Bring it up. So for you new guys, all right, I got 3 AVPs and Pearson correlations. You got the ALR AVQ. Drop down here. No brainer move right there. The low length had been flashing. Nothing's happening though. Now the 981, 2400. When this is going on right here, when this 2400 is freaking flashing, the 981 flashes again, the alert is on. All right. Volatility expansion is imminent. All 3 go into significant positive correlation on the expansion. And you get the resulting move. All right. So you're going to get your entry on the low one. Right? It's going to start to expand first. It's a no-brainer. You are in this trade. You were in this trade on this candle. Okay? You're going to try to get a limit order filled. The move's going to start. So do your best to hit that order book and get a limit order filled. Don't mark it in. Let that thing snap back a little bit and grab you, take you for a ride. And then it's just beautiful when you see volatility react like this. Right? Beautiful thing. But that's what you're looking for when you're learning to get these nice volatile moves. You're looking for these AVPs to all line up. Now, you can certainly just trade the flashes on the low length and wait for the expansion. They don't all have to be. Here was a good trade right here though to the downside, just on the 5, I think, what do I got it on? 525. Yep. 525. I changed it from the 636. And then, let's see here. So this move, right, on the 5-minute on Bitcoin, what's happening right now? Look at the ALR. Look at the returns. All lower highs. All lower highs. On a bigger scale, from peaks of data sets, there is no div, but locally, there's definitely bear div on the 5-minute building between returns and price action. And if I go over, let's throw this on 5-minute Bitcoin. Let's see this move up. Nope, it's just on laser returns. See it here too. Same indicator. So this will probably move back down to the downside. We'll see if this volatility expands, it's coming down. It's negatively correlated. The entropy, you can just see it moving in real time. That's what I love about it. Very reactive. I mean, we're on a 5-minute. You won't see other, I love it. Whoops, where's that bad boy? I got too many, there it is. But yeah, I know IMARS, I know Halivera just joined, Koi. I think you guys all have the pro charts. Any questions, type them in the stream chat. Steven, let's jump down onto our real low time frame. A lot of magic happens down here. A lot of magic. And you can even, just to practice, you can run a super high length, right? You're waiting for the juicy moves. That's what you're waiting for. But you'll learn a lot quicker running 3 of these. I know it just looks complicated, but if you understand, you're looking for the flashes. You're looking for volatility to crash. Total contraction. Then the moves come. This is, people using volume. People using traditional TA in general. You just never know, right? I try to tell people about volatility. They immediately start talking about volume. That's when I'm like, you lost me a hello. Talking about volatility, not volume. Yes. Let's see what this. Yeah. The 4 hour, I'm telling you, we got a move coming. The 2400's on its way down. Total contraction. There is a move coming in Bitcoin. There is definitely a move. There was a bull div on the 4 hour between returns and price action. This whole move, it's starting to pop out. That bull div is starting to play out. So could it be a move to the top side? Sure it could. But we don't swing trade Bitcoin. So looking at a 4 hour chart really doesn't matter. But when I come into an intraday trading, right? I'm starting on the 4 hour, 90, 45, 15, 5 minute. I'm getting a bias for the day. I'm watching SPY pre-market. I'm looking at the correlation. We already did. I'm even looking at correlation on low time frames. So as soon as that market opens up, and we can go back and I can show you. It's like every damn day opening, boom, we've had dumps. $9:30 a.m. This is Bitcoin. 9:30 a.m. Boo! And pre-market was dumping on SPY. They're highly correlated. So it's a lot of things, people don't realize when you start working your correlations and you see who's highly correlated, you're not just trading one asset. You can trade them both in lockstep. They're going to move together, especially if it's significant correlation. We'll see what happens here. Go back over here. You know what I want to do? Okay, I didn't want on that. There we go. Yeah. Yeah, this baby's probably going to spill over a little bit here. Especially, you get one more low, or you get one more higher high here, and then you get you get this rejection off the zero mean. That bear div will play out too. The volatility saying this thing's going to walk up. So that's the thing, right? That's why you always got to make sure there's a top. You can see this 5 minute, but it could be setting up just what I said, right? This could come up, create a top up here, and then dump out on some bear div. Because here's the high. Right? All lower highs here, but now you're getting a DLP candle. It's starting to climb. Starting to cancel out this div. If it can close up here by the 2SD, it's Gandhi. And we could get a late run here. Starting to trend to the top side. And when you have a contracting volatility, right? Contracting volatility. Negatively correlated. Price action walks up. Usually, you'll get a crash in volatility. It'll go to zero. And right when that volatility starts to expand, this will flip positively correlated. It's how the volatility, contraction, and expansion, like the ebb and flows, usually work a high percentage of the time. Contraction, negatively correlated. Ebb and flows into expansion, positively correlated. Moves, and you can go back in time. Usually a lot of moves start with a walk, right? Start with a walk up, then you get a couple big 5-minute candles when the volatility expands again. And there's people out there that says this is hogwash. Sad. People have been in the industry a long time. Just like wow.
So the easiest way to explain positive or negative drift, or I don't know what anyone wants to call it. I'm going to call it.
There's really no negative drift. There's always going to be a drift to the top side in any market.
Yeah. So the easiest way to spot it is, for example, let's say the Bollinger Bands. If you use something that uses standard deviation, and those bands are contracting. So, for example, if you come from the TA world, your Bollinger Bands are contracting. The price action is going up. That tells you that volatility is pretty much contracting when you're using tools like this. When you make hour bands, that volatility is contracting, but price is going up, which means it's easy for price to go up now. So a lot of smart traders will lift their sell orders. And now when you can see, for example, what Bobo shown us here, volatility is contracting and it moves into negative correlation, you'll see that volatility is contracting and price is floating up. It's easier to buy up the market if you're about to do an algo. That's pretty cool. And that's sort of how you can start to look into volatility if you're just checking it out this evening, for example. Anyway, I'll end.
Yeah, what he said. You gave me a minute to return a text. Thank you, sir.
Cool.
I was half listening. You can talk anytime, you know that. Anybody can. That's another thing. If anybody wants to speak up, speak up. You can talk too. I know some people are shy, which is fine. That's why we got the stream chat. I usually ramble on for everybody.
I do sort of feel rude because you are streaming, it is your time.
Yeah, but buddy, when the markets are like this, you can talk all you want. You can't shut me up when the bull's running.
Usual.
Times like these, though. All right. Let me see something here. Okay. Starting to contract again. You can see this is what's great with correlation. I mean, this whole time, right? You've got the high length expanding positively correlated, but the low lengths are contracting negatively correlated. All three saying price going to the top side. But you can see, look at the DLP, right? It did have a bigger candle, right? It settled down right at the end. This is creating a nice long-term time series setup of bear div between returns and price action. And so then you're popping over here. Where are we? This would be a great, it's heading probably right back to the top side of the 68.3 Laplace. We already been down here messing around testing the bottom side of it. Probably going to go up here by the end of the day, at least test it. 20.4. Oh, well, we got a wick right there. That's right. We did get one wick up there. Forgot about that sucker. We're probably going to get another. I'll tell you what, I mean, the buyers want to close up in here. It'd be nice to close the day above 20.5. A couple $100. It's not asking for a lot.
For sure. If it didn't make touchy, then no trusty. So it will be back.
Yes. That's a thing. I mean, there's no like bear div, right, from peaks of data sets, which is good. It's all just a little local stuff. So we'll see what happens. We are on a 5-minute, but that's where we're trading. And right now, you're foaming at the mouth. The volatility is just crushed. It's at 0 right now. Did you just see the correlation go positive? Starting to slope back up. So this could have possibly been contraction, ebb and flowing into another expansion with a positive correlation, right? We're about to find out. So you'll start a walk up and then get a pump. See what happens. And that pump would drive it right up in this area. And that's what usually happens. You'll just get some woo, woo, right? You'll get these little 5-minute bursts. But that's the thing, what's great. Once you learn volatility, you know why everybody else is just sitting around waiting in their little echo chamber. It's like, volatility is low. There's going to be an expansion of volatility. You're just being patient. You're waiting. And once you get good at it, you can literally get in those trades, right? You can get in on the walk up when you really start to see it time after time after time again. And obviously there's going to be other factors involved, but good stuff. And there's no bear div. It's all just on this local set right here. And it's just on the DLP, a little bit on the returns oscillator. Hey, buddy. Goodness. Holy. It's the Warlord posting. Oh, yeah.
That's the law of small numbers and the law of large numbers. Oh, and now we got the peak also flashing right now as I'm speaking.
ZP.
I'll take
Right?
beautiful.
Good here on the 45 too. No bear div. No bear div. Of any sort. We'll see. Just trying to get a
Now we
peek
get a little
the rest of the day. The 90 minutes having an outlier to the top side. Log return Z-score, variance. All the fishers are heading up. And, all right, on the 90 minute, look at it all.
Yeah.
Look at all the bull div. All lower lows. Now we're getting this pop out of that. We'll see what happens. This could be a strong little move. Could be strong. You can see the volatility's been expanding on the 90 minute, positively correlated. Entropy was going back into randomness. Now it's flashing. This baby's about to start to drop back down in the trend. I mean, everything's lining up for this to move to the top side going into the end of the day from the 90-minute down to the 5-minute.
Yeah, the 90-minute expansion looks like it's got legs to do to 20,870. That's our weekly mean.
And the 90-minute variance have been pretty flat. We haven't had a big outlier in a while.
It's just been building, waiting to let loose.
Oh yeah, it's just a little coiled snake.
He's gonna jump to it.
For you guys listening that don't know what variance is, and I recommend, like, just have a pen, write down words you hear, just go Google them. What the hell is variance? Variance is a spread of data around the mean of returns, and the standard deviation of returns is volatility. Volatility is pushing that data away from the mean. Variance literally tells you when you're having an outlier, and usually when you're having an outlier, it's going to be a fat tail event, second or 95.4% probability move or more. Every one of these, you can throw a projection boss on it, and you'll see exactly what I'm talking about. That's what it's telling you. Within the distribution, you're having a fat tail event, like right now. So blow this baby up. It's at 1, 2, 3, 4 candles. My girl's having surgery tomorrow. Just teeth wise, but yeah, it's some complicated shit. It's on my mind. That's why I'm a little okay. So as far as that outlier, it's played out. You can get more out of this, but say this is a 5-minute chart. Have I already taken my profit? Hell yeah, I did. Right here. And this is really why that baby had an outlier. I mean, it ran beyond not the 95.4 Laplace. But you can see this latest 90-minute rejected right off of it and pulled back. Is what you want to see for extended moves. Because right now, there's only a 4.6% chance the candle closes above this level. You can get a rocket, right? You can get a little rocket through it. But there's literally a 95.4% chance it closes inside this range. You see a candle close outside of it, that's when there's a probability you're going to run to the 99.7 and test that. But it doesn't matter on any of those outliers. You can throw this projection on and you will see this. So easy to take profits. You just know, right? And we're talking about, think about it when you're using a distribution like this, and it's a probably at a 1.5% move or something. But what was this price wise? 19,980. Yeah, literally about a $300 move. And we're talking about scalping these outliers for like $50, $100, $150 profit taking. And you get 10, 15 of these a day, right? In an intraday trading day, it adds up. It adds up if you only get 5 or 10. Especially if what if you're trading with a few Bitcoin, right? Bitcoin move, you take $100 scalp trading with 3 Bitcoins, you just made $300 in a few 5-minute candles. Obviously, this is a 90-minute chart, but that's what you can show this on any time frame when you're having outliers. See, you go down to the 5-minute. Like this, I mean, massive outlier here. Let's see what that even is.
It's gonna get scooped.
25. Yeah, I mean, it ran outside the 99.7. I mean, just look at the perfection. I mean, I talk to so many people about this stuff, right? And I don't know what it is. You can show people time after time after time after time and again, and I spend most of my day doing that. They just don't see it.
Yeah, bro, I promise you, like this is you have to see this, bro. Why are
It's
you
like
still trading the T8, Tony?
the algos trade the distribution. It's just a fact. I mean, in this volatility, hold on. Let's see. Yeah, look. I mean, look at the expansion. Wham! Full expansion, positively correlated. Entropy. Bam, 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 bam. As soon as that entropy turns up, boom, you're out of the trade. And you're below second standard deviation band on the entropy too. So you get this move outside to 99.7. Everything that the universe is all about mathematics, in my opinion. Math's at the heart of everything. And it's like the probabilities are like, what the hell are you doing? You need to get your ass back in the distribution. It charged back in, bounced right off the bottom side of the 68.3, went up right to the 95.4. Now, who knows? Maybe it's coming back down to the top side of the 68.3 again. But I like showing moves like this because people are like, well, that distribution, what are you talking about? That's foolish. It's like, no, it's really not, but it's okay. Like I said, you'll never hear us shilling any of this to anybody. People creep in every once in a while, however they hear about us. That's what we like. We're not trying to share this with every freaking buddy out there. If everybody was trading like this, there would be no profits to be had. A lot of people that trade traditional TA are on the other side of volatility traders' positions. It's just the truth. New traders come in too. They don't even realize. A lot of them don't even realize. Hey, when you just lost that, somebody just won that trade, right? I mean, it's like there's a maker and a taker here. Somebody just is freaking spun upside down, staring at a pillow. That's a fact. These algos use retail traders as liquidity. Because literally 99.9999% of retail traders do not even know a thing about the distribution, price action volatility ranges. I mean, they just don't, which is unfortunate. But that's why we love showing people these things. If you do make it over to this Discord, most people, that are coming from traditional TA are just trying to crack the code. That's what we're doing. Our coders just continue. It's nonstop. There's always something that they're figuring out. They're upgrading. They're always doing something. They're the engineers, right? They build the stealth fighter. I just fly it. I know the basics of the math behind this stuff, right? I can go into the code and change short titles and descriptions. That's where my expertise ends when it comes to fucking that part of the deal.
The English part, bro. Yeah.
That's why it's a perfect. We're just a great group, man. We really vibe. We really vibe behind the scenes. We get along. We always have. The six of us, just wow. Yeah, exactly.
For sure. Yeah, no, man.
I love it.
So it's just reading Ibaz's comment.
Me
Yeah.
too. That's the thing,
Anything
man. It's like the thing with building a bot is that it's not as easy as there's a lot that goes into it. That's why some of these high frequency trading firms they've paid a lot of money for their algos, man. 'A lot. because a lot goes into them. I mean, these things are firing off trades so fast.
So, Imaz, here's the thing. When it comes to building bots, okay, it gets to the point where you can have a really good strategy. So, for example, if someone's technically inclined, they could more than likely build a bot using the alpha trading tools. But then there's a few other things you'd have to ask for code and stuff like this. But when it comes to building bots, it gets to the point where you have to build a bot that hunts other bots. Okay. And then you'll find that that bot is hunting other bots that are also in the region of these lines. So you eventually start building a bot that everyone is pretty much running a similar strategy, but they're all just trying to hunt each other in those micro cents, be it on a stock or micro cents on a stock. Over here, it will be Satoshis. And they're just trying to fill in over there. And it pretty much just comes to those points, right? So maybe you think that a bot would get the whole trade, but no, because it's being hunted out and it's literally one big wick triggers your sell order. And your bot could have been trading up 10% an hour. And someone who knows that this is how I get those bots to sell, I just need to put the candle here. And because it's a bot that's doing it, it will automatically trigger it, which puts you back in the same position of monitoring the bot so that your orders don't get triggered because you know what's happening in market structure. That is the catch with building a bot, is that you eventually go up against guys who have billions of dollars and they are literally just finding ways to hunt you in the book because you're looking at the same thing. So instead of fighting them, join them. Beyond that side of things, instead of trying to monitor your bot to see if it has joined them, just join them. It's a full circle of life, back to looking at a screen. But yeah, anyway, I hope that helps. A lot of guys ask, can we build bots off of this? Yeah, you can. But man, I think you would have a harder time pulling profits considering that you can't program, wait if price action comes back to this line and then put the order in. And if not, fill here. Now you've just joined the bot race. And that's how you get chopped up. And slippage, and you can't account for slippage because they're going to be wanting to make slippage. That will put your percentage returns up. It's a serious game when it comes to bots nowadays. So just monitor them and make sure that your strategy is on the strongest bot. The strongest bot is what's using the model. And when it's not, you can see. And that's about it. Instead of trying to hunt for all the bots.
If you look at this chart right here, so I just showed you the projection from this move, went up through the 99.7, came back down to the mean. Then you throw the projection on the down move, goes down to the 99.7, back to the mean. Close. It's just, people always wonder, what do they call it? They call it chop. They can't tell you though. We know there's a reason. There's a reason why it chops. And that's it. It's a distribution. Right? Returns mean revert. Price action follows returns. Meanwhile, people are using, not only are they indicators built statistically on price action, they're lagging on top of it. They're not even good for what they do. And people are trying to use them to trade markets that are being dictated by the returns. You won't hear fucking anybody out there talking about this. Nobody. You won't hear Michael Saylor talking about it. Ray Dalio. You won't hear any of these financial guys talking about this stuff. But I assure you, most of them trade options. They know about the distribution. They know about volatility. You don't scream from the rooftops how you're taking all the retail traders' money. So it's crazy. And if they're not part of the solution, they're part of the scam. in my opinion, yeah, exactly, Holly. Exactly what you can do. Especially if you're just trading the distribution, which you can. You got to have some volatility though. But yeah, for sure. That's why when you're trading these low time frames, you there is a lot that goes into it. You're operating the exchange, right? You're that there's a reason why like big some of these big traders, they'll have a market maker, right? They're doing the screen work. They've got somebody else operating the trades. I'm a one man show. I'm doing it all. So you freaking literally you're setting up the indicators. This is why you have to become so efficient at it. Even operating all of the inputs, knowing, right? How fast you got to flip all this. Yep.
You should see how you guys should see how Sam SBF, who owns FTX, trades.
Yeah,
He's pretty
yeah,
much shouting at like 5 people, and he's trading as well. Like, it's nuts.
yeah. He's definitely he's got a nice setup. But you see, yeah, I did. I saw kind of a video. I mean, when you see somebody when you're in full gear and you're intraday trading, you're just like you're in awe. You're just like, what the hell is even happening right now?
It's just flow.
Yeah, you do. You get in a flow. You get in a major freaking flow. When it comes time when you understand volatility, entropy, the distribution, right? The VRE, the volatility ranges and stuff, the correlation of the markets, everything that goes into it all, what all the big firms are literally doing. You'll have an entire, here's the thing though, there'll be an entire firm doing it where
Yeah.
we're asking you, hey, buckle up, buckle up, Buttercup. It's time to learn because this is what we're doing. We're taking retail traders and turning them into sharks where you literally have the confidence. You go dive right in that freaking low time frame, Shark Tank, start scalping with the algos. You're running with the algos because the algos are running with the returns. It becomes really, really powerful. And then it gives you the confidence. It's a good feeling, man. Because these markets, everybody's been raked across the coals on these markets. I don't care who they are. Look at Michael Saylor right now. He's pissing in the shorts. He wants us to go back up so bad.
Same name, bro.
And so that's why I can go a little longer. I got nothing going on. Let me reload this chart.
So here's a cool thing, guys. If you hear, let's say you're scrolling through the Twitter or you watch YouTube and you just see a thumbnail, Bitcoin to 150 grand. Well, you can literally see if that oak is in your mathematical model. How are you going to do this? You're going to throw up a projection cone with continuous projection. Okay. And then you're going to see whichever number they pull out of the bag, right? If you see a YouTuber pull a number out like $126,073, you go look at that oak, right? Well, go look at your cone because maybe that number's matching up with your cone, right? It's so easy to not even worry about what the whole world is thinking. If you just know, like, whatever numbers I see, if they don't match up with the numbers, then I know society hasn't seen the numbers. And if it does, it doesn't change my opinion. It just says that, hey, his model, however the hell he pulled that model through TA, check, it's there. And that's usually how it all works. Is anyone that's pulling a number off of TA, you can more than likely throw up a distribution code, and they will be out by about like 1 or 2%. And that's the defining factor, really, 1 or 2%, especially if it's 4-hour plus timeframes on crypto. Yeah. Anyway, I thought I'd just drop that. You can use the cone as anti-hype limits. and as well as the VRE. When the coin and the VRE touch up, you'll know that that is maybe more of a significant point. Go looking around or just observe if there's anyone else that's saying the number of where your projection coin and your VRE touch. And if they do, maybe they're a smart trader. Ask them how they figured that number out and go and be with the coins. So if that's how you want to get your bias, you can also get your bias like that.
So
Like,
you see in this local move here, boom, boom. The move starts, go up, reject off the 1 SD to the top side, normal distribution, not Laplace. And then dump out, close below the 68.3. Then that next weekly candle went down right to the 99.7, pulled back up. So right now, there's a 95.4% chance going to start closing some weekly candles back in here, but that distribution drops. That's the thing. You can just ride. You can just ride. That's why I'm always looking for trend changing divergence on like macro time frames. When's the move going to be over? That's what everybody wants to know. When. It does. Plan the index, I am not. Bitstamp, no. Index, let's go to weekly. Yeah. Okay, so if you're looking at the log return z-score, you got bull div. You got bull div on the returns oscillator. None on the DLP or the Fishers. The Fishers, all four are still in lockstep to the downside. So here's what would make a lot of sense to me. This weekly candle or the next, we close a lower low. One more lower low, then you're going to get a little turn down by the log return z-score, probably a bounce off this 95% confidence interval. By the end of the week, maybe this return oscillator goes up, and then we get a turn down and bounces off the zero mean. Then you got 3 stabs of bull div on the weekly macro time frame. That's why I think we're going to close a lower low here. It's really acting like it. We're still trending on a weekly, right? The entropy is still trending to the downside. We're down below the 2 SD band, but flows down around 20. All right, get a lower low, maybe even 19, somewhere down in here. Create another stab of some bull div between the returns and the price action. Whatever you do, lose the fucking outlier, which it is right now. That's good. So we'll see what happens here. That's why I'm keeping a big eye on traditional markets. Big eye on it. If you see Bitcoin have a nice move tonight, you'll see SPY definitely. SPY it looks like pre-market. It's going to have a pump. And this data set on BTC is above the new daily volatility range. So that's good. That's what you don't want. Like today, right? You open up below it. We've been down here dicking around below it all day, bouncing up off of the 68.3 Laplace down here. The daily S1, that's what the green line is. So good stuff. But yeah, we went a little over. We will be back tomorrow, 5 p.m. Eastern Standard Time for you guys. And that's why we do this. That's why, as you start to learn, there's not a stupid question when it comes to this stuff. If there's anything on your mind, ask questions during the stream. Because I can guarantee you, if you have that question, somebody else does too. Right? And then, even if they're not in the stream, they're going to be watching the vid. The question will be answered for them. So yeah, think about that. And I'll see you guys tomorrow at 5 o'clock. Thanks everybody for showing up. We love you guys. Talk to you tomorrow.
Yes.